I want to share with you some common mistakes that I see home buyers make. This may be a first time home buyer or somebody who's buying their second or third home, but these are mistakes that we see happen and they are specifically from a mortgage point of view. My name is Miles Pitcher. I'm the owner of Superior Lending. I'm located in Utah. I've been in the business for 21 years. First mistake I see is people who will just talk to a loan officer and they're told, this is the maximum amount you can qualify for. And they go to that amount on what they can qualify for. They do not take into consideration the fact that that monthly payment may be a stretch for them. They move into the home and they feel somewhat house poor. I never want my clients feeling house poor. There is something to be said about stretching and sacrificing a little bit to make that mortgage payment, but I don't want these people in a spot where it's going to be a stretch for them making that monthly payment every single month. Please understand that when we look at debt ratios and qualify a client, we take the gross income or before tax income for a client and use that in qualifying. Please make sure that as you're looking at buying this home, you look at what your net monthly take home is or after taxes and just see how comfortable you are with that new mortgage payment. Don't forget to include principal, interest, taxes, insurance, and HOA fees and private mortgage insurance if applicable, and then take a look at other household expenses in there. Number two is reserve. So having some money set aside for reserves is a smart thing to do. As far as underwriting, sometimes it helps in the borrower qualifying for more home to be able to buy. But I believe that a client needs to have set aside anywhere 2 to 6 months of emergency funds. This is very important. You never know what's going to happen with a loss of a job, medical, another pandemic, whatever it may be. I would prefer my clients to have that emergency fund set aside before they buy the house or upgrade their house. In addition to that, this market is a little bit crazy, and having some extra reserves in dealing with some of the offers will be super helpful for the client. Number three, using local professionals. This is a big deal, and this applies to loan officers and real estate agents. Using someone local is critical in being able to get your offer accepted by the sellers. Also, there are reputations of people in the community. The realtors know who the loan officers are that are doing a good job and are legitimate, and the same thing goes with the real estate agent. If your realtor is well known and has a great reputation locally, you have a much better chance of getting your offer accepted. The same goes for a loan officer who has a great reputation. There is a black eye or stigma against some of these national online lenders who come in and qualify people and act as though the process is going to be so simple and so easy. In reality, many of those transactions turn into disasters and have a hard time closing on time. So make sure you're using a reputable local real estate agent and loan officer. And in fact, when it comes to real estate agents, as a buyer, your real estate agent who's working for you as the buyer's agent gets paid by the seller. You don't pay them out of your pocket, generally speaking. I would say the majority of the time. Number four mistake is loan options. This is a big deal in this market right now where clients need to be able to deal with some rising interest rates, making sure that the payment fits their needs and they can qualify for the home that fits their family's needs. So let me give you an example of what this would be. If we have a client who's coming in and they have saved up and done really well to put 20% down, well, maybe we need to look at doing a 15% down so that they have the money to be able to cover closing costs, to be able to cover an appraisal shortage, or go bid over the asking price on the home. There are other instances where a client may need to look at taking a higher interest rate. What does this do? A higher interest rate may give that client a lender credit that can help cover their closing costs, so that if their funds that they have for down payment closing costs need to go towards down payment, an appraisal shortage, or a bid over the purchase price, the lender can help by giving a lender credit if we raise up the interest rate just a little bit. Please be flexible and look at those loan options. Mistake number 5. I see this happen all the time where a client is interested in buying a new home. They are slow to provide to us all of their documents and have everything in order ready to go. This includes letting the lender pull your credit, providing to us all the supporting documents so that we can have your file ready to go. The current market is such that you need to be ready to move fast. When you find the home that's right for you with your real estate agent, you need to be able to have all those things ready to go with your lender. Once you find the home, that is not the time to then start shopping the lenders or gathering your documents. It needs to be done ahead of time. Have everything in order. It will be a competitive advantage for you if you get those things ready and in your lender's hand. Let me talk about what's happening rate-wise right now. This is the inverse chart, and you can see that as the chart moves down, rates are moving up, and our trend has still been rates getting worse and worse. We have inflation that is the enemy of the interest rate. That's happening. But then members of the Federal Reserve, in fact, some of the most influential members of the Federal Reserve Board, came out a couple of days ago and talked about accelerating the balance sheet runoff. And what this means is for years, the Federal Reserve has been buying mortgage-backed securities. They've been buying these mortgages that people close on, and they've been holding them on their balance sheet. We now know that they are no longer buying those and holding them. And the ones that they have currently on the balance sheet, the members of the board are talking about selling them off quick. And that would be detrimental to mortgage rates. That would make rates rise up even more. The news from those members is what has caused rates to get worse over the last couple of days. So it's kind of a blow to us on interest rates, and we've been watching that closely on what's happening with the comments on the balance sheet runoff. We know the Federal Reserve is going to raise the Fed funds rate more this year. That will hopefully control inflation. And once inflation gets under control, typically rates get better at that point. If you have any questions, please feel free to reach out. My number's there. You can text, you can email, you can call in. I am happy to help any client answer questions that they may have, no matter where they're located. Do me a favor, please, like and subscribe to this channel. We will continue to put out a weekly video that gives you some tips on mortgages. Have a great week. Thank you.